We're going to talk about how to organize your business and how to help you save some tax. So let's get started. We only have just a few minutes. I work with two of my boys. That's just now this website address will be important. That's a good reference for you. There's a lot of stuff on there about direct selling businesses. So look at that. That will be a big help. My boys, of course, they're both better looking than I am, which really makes me mad. Business structure. We have 3 of them that the IRS is letting us do right now. Sole proprietor. How many sole proprietors here? Which means you haven't organized with your state yet, you just filed it on your personal return, right? Mm-hmm. What's that? Okay. S corps? Anyone? LLCs? One. Okay. Okay, good. This is probably this is the one where most people are located right now. Once you start making good money, this is the one that's going to help you. We're going to talk a lot about S corporations today. Are most of you just starting out, or have you been in Posh a while?
2 years or more.
Okay. All right. We're not going to spend a lot of time on liability. When clients come in to me, they're concerned about 2 things. What if I get sued? And how can I pay less tax? And so today, I don't think liability is a big issue, so we're going to talk mostly about tax. Just for your information, sole proprietors have no liability protection, which means if you ever get sued, your personal assets are at risk. Okay? As an S corp or an LLC, they are not. So if you were a construction company, I would say even if you're not making much money, it would be a good idea to incorporate this for liability. With you ladies, probably not too big of a deal, just because I don't see a lot of risk with what you're doing. Once you do incorporate, you must act like a corporation. Even the sole proprietors, ladies, I would recommend you set up a separate bank account for your business. Now, I know that you don't want to do that, but here's the reason. If you get audited by IRS and they want to look at the very first thing they ask for is always bank accounts. And if you have your Posh business mixed in with your personal, guess what they get to see? Mm-hmm. Everything. They get to see how much you spend on groceries, how much you give in donations, where your kids go to school. They get to see your whole life, and I've been doing this for a long time. That's the last thing you want to do, is let the IRS see any more than based on the city
when I set it up right away and I never used it. Such an idiot.
Which is a big deal. Now, let's talk about tax. This is a big deal. It's tax season right now. So, when we talk about profit from your business, we're talking about not what your 1099 says from Posh. We're talking about your 1099 less your expenses. That's profit. Okay? Now, once you start making pretty good money from your business, you can see in this column we have sole proprietors, which most of you are, and LLCs, in this column S corps. On $50,000, you can see federal and state tax doesn't change. But look down here, it's what's called self-employment tax. What is self-employment tax? Any of you know? How many of you work for someone and get a W-2 wage? Few? Okay. I'm gonna pick on this young lady right here. So every 2 weeks you get paid, and they take Social Security and Medicare out of your check, don't they? The company that you work for then has to match that amount, and all of it gets sent to the federal government. Okay? Now, if you add up those percentages, which you probably never have because none of us do, what they take out of your check and what your company matches adds up to 15.3%. But when you're self-employed like you are now, guess what? You get to pay the full 15.3%. So on 50 grand, that's almost $8,000. On 25 grand, it's almost $4,000. So it's a big amount. And you can see as an S corporation, it's almost cut in half. So here's the deal. Once you get to about 20 grand of profit from your Posh business, you are ready to do this.
You're ready to do that.
Now,
But can I do
you
it
have to
now?
incorporate in the state in which you live. What does it cost? Never thought you'd never ask. What it costs to incorporate, if we do it for you, is about $500. And then you have to pay a filing fee in the state in which you live. So you can see that the tax savings here is about almost $4 grand, and all it costs you to do that is about $500. Maybe
Oh my
$600
God.
filing fee. Unless you live in Texas. Anybody live in Texas here? Everything's bigger and better. Filing fees are too. In Utah, the filing fee to incorporate is $70. In Texas, it's $300.
Wow.
Bet your PA's like 1,000.
Fantastic.
Wow.
It's still worth your
Tax
money,
hungry
though.
bastards.
Still worth your money. So, if you don't remember anything else, ladies, remember when you reach about 20 grand of profit, you need to start thinking about an S corporation because it will save you tax. Yes.
We have a lot of military spouses, so is that home residence or where you're living out with your husband?
It's where you're living, because that's where you will incorporate.
So,
Not your state domicile, it's where you're living at the present.
how do we start doing that?
We do a lot of military, and they're interesting because they move you a lot. Yeah, it's hard, and, you know. Yep. So we had a military family incorporated in Colorado, and then they moved to Texas, so we had to reincorporate them in Texas. They were there for about 5 years. But now they're in North Carolina, and so we just incorporated them again. So they've done 3 corporations.
They're all separate?
Yes. Yeah, unfortunately they are.
So when can you do that? You know, file to become an S corp. Like, what if I got my 1099 and I'm going, oh crap, I'm probably going to have
Too
over.
late to do it for 2015.
Okay, so you have to do it in.
If you expect to make more than 20,000
Next
profit
year.
this year, you should incorporate right now.
Right now. Okay.
Yeah,
Okay.
yeah. Now, it will make a difference who you go to incorporate. We have an attorney down the road. Any lawyers here? Excellent. This lawyer down the road charges $2,500 to incorporate someone. So be
Wow.
careful. Be a little careful with that.
What is the average?
We've
He
charged
charges
500 for
500.
15 years now. So I don't know what the average is.
So you have to go through an attorney or through
A tax.
like we go through H&R Block.
Well, H&R Block can't do it for
So
you.
you have to go through like
A CPA or an attorney or something like that. You'll probably pay less
I'm
money
just gonna
with a
go to him.
CPA than you will an attorney. So, S corporation, big deal. Big deal. Okay, lots of questions about how you keep your stuff organized, because you can have a lot of stuff. Now, we recommend QuickBooks Pro. There's a lot of software put out by QuickBooks. You just need QuickBooks Pro. You do not need QuickBooks everything, okay? QuickBooks Pro is a couple $100. Whoops, wrong slide. It's pretty simple, it's inexpensive, pretty easy to use. If you run into trouble, we can help you in our office. I can't, I'm no smarter than you are with it. Okay, let's talk about something that we get a lot of questions on. We have clients call all the time and say, well, I just bought a laptop computer, or I just bought a truck, or I just bought a car. What can I do? Under Section 179 of the Internal Revenue Code, there's a lot you can do. What I mean by that is, let's say that this young lady, let's say that you made $40,000 profit in your business this year. If you, for 2016, if you went out and you bought, let's go to this next slide, if you bought a sport utility vehicle with a gross vehicle weight of over 6,000 pounds, you could write off 25,000 of the cost of that vehicle in 2016.
What?
So if you go out and buy a Denali, a Yukon, a Tahoe, a BMW X5, Lexus 470, everybody makes one. In fact,
Oh, I'm getting a new
Mercedes,
car, baby.
made a vehicle about 4 years ago.
Maybe not this year.
Guess what the gross vehicle weight of this Mercedes SUV is? Keep in mind, it has to weigh that much.
1,001.
6,005.
Oh, wow.
Gross vehicle
Different
weight.
tires,
Why
different
do you
tires.
think they made that vehicle?
Oh.
For us. For
Yeah.
us. So that's a
Oh,
pretty
more
big deal,
than
but you have to have profit in your
Mhm.
business.
No.
So if you're just starting out and you don't have a lot of profit,
So you have to have
this will
profit.
help you right now, but it'll help you down the road. Right now,
This is great
let me
news.
just go to another slide and we'll come back to this one. Right now, where is it? Oh, I thought it was the next one. You're going to want to use mileage logs. So, for example, if you're driving a Toyota Camry, the way you can deduct automobile expenses is keep track of your miles. Okay? And let's say you use your car 70% of the time for business, you can write off 70% of your miles for that car. So if you put 10,000 miles on your car and you use it 70% of the time for business, how many miles did you write off? 7,000. 7,000 miles this year at 54 cents a mile is going to give you a deduction of over $3,500. Pretty good. Okay? So mileage is a pretty good way to go.
Use this vehicle just for
Let's go back a little bit.
I mean, I'm sure you would have some personal use out of it, but
Then you
I
can
always,
just
how
use
do
the
you
regular
just
vehicle.
select
But
them?
for those of you
Label
doing pretty
them.
well, and we had
I
a
want
few in the
that
last
scale.
class doing pretty well, this section 179 is a great tax deduction. So keep that in mind, okay? Keep it in mind.
How, the business use part of it, I mean, what,
of your vehicle.
I mean, so, you know, sometimes you are not delivering a
Yeah.
product.
So
What's,
the way you do that is the same way you keep track of miles.
Mm-hmm.
Let's say you have an SUV and you put 10,000 miles a year on it, and you say, well, 8,000 of those miles are Posh related.
Mhm.
Then you're using your vehicle 80% of the time. So you get to write off 80% of the cost of that vehicle.
Gotcha.
I see what
So
you're
if
saying.
you spent 40 grand on a new or used SUV,
Mhm.
you can do 80% of that, or 32,000 bucks.
Okay.
That's a great.
That's incredible.
So in other
Okay,
words, you
health
have to.
savings accounts. Who has one right now? Who's using one? Great. You like them?
Love 'em.
Best things in sliced bread.
Mhm.
Yep. So. to
I
do
did
an
for my
HSA,
company, but
You have to have what's called a high deductible health plan, HDHP, high deductible health plan, which isn't very high deductible anymore.
No.
So what this means, and this is available to anyone, sole proprietor, S Corp, LLC, anyone. It's the only way that you're going to be able to deduct medical expenses. I had a lady in my office, a couple on Thursday, and they have a baby, and they said, we spent about $6,000 in medical expenses, and we want to deduct it. Well, they made quite a bit of money, and when we put their stuff in the software, they made too much money to deduct it. And I said, do you have a high deductible plan? Yes. That's why we had to pay $6 grand out of pocket. I said, has anybody talked to you about an HSA? No. I said, well, let's talk about it. So we talked about the fact that for 2016, you can put as a family $6,750 into this plan max, or anything less than that. And whatever you put into that is totally tax deductible. The whole thing. So, they'll give you a credit card to help use this HSA. So when you go to the doctor, when you go get a prescription filled, you give me a credit card, and the money comes right out of this HSA account. So you're now paying that money with $3,000. Make sense? I losing you? Okay? So this family that was in my office Thursday, if they would have done this last year, that $6,000 that they would have paid would have been totally tax deductible. As it was, zero was tax deductible. Would have saved them probably $2,500 in tax had they have done that.
Damn.
But nobody mentioned it. They were new clients. Okay.
Your HSA dollars roll over in the course of
Yeah, that's the great thing
That's about
HSA.
HSA, yeah.
If you put 5,000 into an HSA and you only use 2,000, the other 3 just rolls over. And then you can put the maximum.
You can do like Band-Aids and stuff like that, can't you? Like contact solution and Tylenol.
Yeah,
Heck yeah.
pretty sure stuff like the HSA.
Well, military has pretty good insurance. You may not have a high deductible plan. Better check it out.
We have a high deductible.
We do now.
Freaking sucks.
HSA.
Yeah.
Although, what do they consider high
Yeah, if
deductible
you're military,
anymore?
probably doesn't.
Does it say like? Will your plan say that high deductible
Go to your
plan?
insurance
It's more of my opinion
Oh yeah.
because we took the cheapest one possible, and so now,
all you have to
because
Yeah.
my husband doesn't listen to me about that stuff.
See, ours went
Now,
up high.
ladies, the thing that you need right now with your own business, you need somebody that will tax plan. Who mentioned they go to H&R Block? They do a good job preparing taxes. They really do. We thought it's interesting in Utah they charge more than we do. It's
Yeah.
a CPA from which is really interesting.
Wow.
But what they will not do for you is they will not plan with you. Do they plan with you? They just prepare.
Yeah.
And that's what, most of these people do. So you need to find a CPA that will plan and talk to you about Section 179, and talk to you about health savings accounts, and talk to you about retirement plans, and what fits you.
Oh man, I'm kind of.
Why don't we start putting some money away that will be tax deductible for you, help you on your taxes, and help you start building for retirement? Talk to you about how to organize your business. Is it time to incorporate? Chances are, if you go to H&R Block or Liberty or Jackson Hewitt, you might get somebody that knows what they're doing, and you may not.
Mm-hmm.
But that's kind of true of CPAs as well. I can say that. You need to find somebody that will do a good job planning, because that will become critical once you start making some pretty good money. We just looked at the slide a minute ago. Probably the most important thing on this slide is receipts. We get the question several times a day, what do I need to keep? The answer is,
Everything.
if you want to deduct it, you have to keep it.
Mm-hmm.
So, to give you an example, let's say you go to Sam's Club or Costco and you spend $500 on product or something for your business, and you get audited, and you have that right on your debit or credit card that says Sam's Club $500. The auditor is going to say, what did you buy? Well, I bought stuff for my business. Okay, show me. Well, it's right here on my credit card. So, you could have bought a lawnmower. How do I know what you bought if you don't have a receipt? You have to keep receipts, ladies. You have to keep them. Okay? Now, I want to tell you what to look for in a CPA firm. This is something that becomes important. Not everyone knows your business. They need to know direct selling businesses.
Mm-hmm.
Not everyone does. So when you're trying to find someone, talk to them and ask that question. Do they plan? We just talked about this. Do they plan, or do they just prepare your return? You need someone that will plan with you, that will take the time. In the last group, I told them I had a client in that we've done their work for several years, and we always send out a letter in the fall that says, hey, it's time to come in and do some planning. We do, I think, over 1,000 businesses right now. A lot of them come in. Well, this guy didn't, but his business tripled in 2015. So he comes in the end of January, brings his stuff, and I said, you're in big trouble. He said, how big? And I said, you're going to owe about $45,000.
Oh my god. Oh my god, I would throw up. I would throw up
I
for
don't
it.
have 45,000. I said, sorry.
Yeah.
I said, why didn't you come in when we sent you the letter? I was busy. I said, well.
Now
You're really gonna be busy.
Okay. He said, well, what can I do about it now? You can't do anything. What could I have done about it in November? Gosh, we could have done a lot in November if we'd have known about it. We had no idea that your business had tripled. You did, but we didn't. So he learned a valuable lesson. This happened about 10, 15 years ago with an electrical contractor. The same thing happened, and their business doubled or tripled, and they got stung pretty hard. They haven't missed a year since. They're always in, because man, you only have to get hit like that once, and it's so painful that you never miss it again.
my God, I'm so scared.
Response time. We had a lady in the last group that said she emailed her a CPA on May 21st of 2015 with some questions. And she says, I haven't heard back from her yet. I said, you sure wasn't an attorney? She said, no, listen.
I think I'd be looking for
I said, well, what do you think you ought to do? What do you think I told her?
New one.
Find a new account.
Fire. Find a new. Response time in our firm is 24 hours. Emails and phone calls. Don't be afraid to ask what costs are involved. We know what, based on our conversations with you, we know a ballpark of what it's going to cost to do your taxes. So don't be afraid to ask. Because we will, with all new clients, I try and sit down and prepare them for that, because I don't want you to be unhappy. I don't want you to hate me because you think that the bill's too high. So I try and, with new clients, sit down and say, here's what I think it's going to cost in this ballpark, so that there are no surprises with tax preparation or incorporation. How do you ladies find a doctor?
Ask around, referrals.
Reviews. Google reviews.
You know what? If you-
I don't
if
trust
you're
those
looking for a
ass
CPA,
people, why
people know the good ones, they know the bad ones, and they know the average ones. You want a good one. They're just like doctors. You have some good ones and some bad ones, and some in-between ones. Ask around. Ask people that have their own business. As I mentioned, we work in probably half the 50 states right now. We do a lot of out-of-state work. It's no problem for us. Email is a wonderful thing.
I wonder if you
Without
do
email,
tax
you wouldn't
returns.
do that. So if you need help, have we run out of business cards?
No, we still have that back here.
Okay, we've got some up here. Get a business card that has my email address on it. Let me know if you need some help. We'd be happy to help you. Doing out-of-state work is not a big deal for us.
Wow.
Used to be 10 years ago.
Do you work in Georgia?
We do.
Okay.
We do. Yes. The 50 states we stay away from, and if you're offended, I'm sorry. New York,
California,
Pennsylvania,
Pennsylvania,
Wow.
Ohio.
and Ohio.
And the problem is with those states, and I don't do this,
I had to feel he was going to say Pennsylvania.
most
I
of
knew
you
it
claim
was
with
going
Mitt
to.
Romney. We did one of Mitt Romney's son's taxes, and he moved to New York, and he lived on Central Park West, which is a very exclusive area. And we did his taxes for that year, and he got a letter that said, you owe us another X amount of money. And he called me and he said, Brad, I just got this notice from the city of New York. And I said, well, email it to me. And I called him back and I said, apparently if you live in a 12-block area,
Oh my gosh.
Central Park West, there's a whole separate city tax because you're wealthy. You're rich and they know it, so they tax you more. And we didn't know about it. Our software didn't catch it, and I said, geez, I'm really sorry. So we stay away from New York, and Pennsylvania is the same way, in Ohio. Is a nightmare.
Wow,
So,
I'm surprised about
sorry if
Ohio.
you live in those states, but if you do, don't call me, we'll call you.
Maybe more than 24 hours.
Probably be from May 21st. Anyway, ladies, we're out of time. I'm sorry. If you have questions, I'll be happy to sit
Good
down.
info.
But, we're out of time.